Okay, green is the color across Asia. Just checking the shape of the markets, all up about 1.5%, if not more. And look at that implied open, 200 points higher. Let's pull it up on the screen again. This is massive, massive pop. Talk about momentum, and you really have it on the upside in the market. So let's see. Promises to be another green start for the bulls. What about individual stocks? Because lots of earnings and individual company news flow has come through as well. So let's straight away get to it. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning to all of you. Rima is rounding up, of course, the last of the large cap tech. There's actually LTI Mindtree as well, to be fair. But Rima, how did HCLTech fare?
Well, we have Tech Mahindra as well towards the end of the week.
That's true.
But let's talk about HCLTech. Now, Q4 was largely in line with street expectation. The street likes two things. One, the deal wins. Deal wins have been very strong. And two, the FY26 guidance was not bad at 2 to 5%. EBIT margin guidance remains at 18 to 19%. So these are the two positives in HCLTech, which is why I'm going with green. Now on to the Q4 numbers. Revenue on expected line declined by 0.8%. EBIT margins contracted to 17.9%, a cut of 160 basis points, and that drove a 6% fall in the company's profitability sequentially. The management says that yes, so far at least, they've not seen an impact of the uncertainty on the business, but they will be watchful going forward. Discretionary spending could be subdued over the short term due to the market uncertainty. Particularly, they will watch for sectors like retail, manufacturing, for instance, auto sector, which could be impacted.
Okay, all right. Thanks a lot for that, Rima. Rima smiling end to end. Looks like quite a few of her results are already out of the way. But let's go across to Upasana. Upasana, Havells India, stock has been doing well in the last few trading sessions. We had highlighted delivery-based buying and long build-up, but numbers good as well.
Certainly, Nigel, numbers look good. Now, Q4, the companies reported, which was above our poll. The growth was mainly led by companies' cables and wire segment and Lloyd, which has reported strong set of numbers. Now, higher copper prices and robust RAC demand in the harsh summer has supported growth this time around. Now, coming to the numbers, the revenues overall saw an uptick of 20%, which was supported by a 21% growth in companies' cable and wire segment, in which margin was largely stable at 12%. Strong power cable growth, RM price increase, and even capacity expansion has supported growth in this segment. Lloyd has reported a robust growth of nearly about 40% on a year-on-year basis, with 340 basis points of margin expansion at 6.2%. And ECD has reported lower than expected growth around 9%, while the street was estimating around 14%. EBITDA saw an uptick of 19%. EBITDA margin was down nearly about 10 basis points at 11.6%, but again above our poll of 10.4%. And PAT also reported a healthy growth of 11%. So all in all, strong set of numbers from Havells India.
Okay, all right, got that. Thanks very much, Upasana. In fact, we will be discussing the outlook ahead on the business with the Havells management. After their strong fourth quarter performance, Mr. Anil Rai Gupta joins in at around 10:15. More numbers, back to Rima. Tata Communications, how did this one fare, Rima? I think numbers, at least on some parameters, look pretty good.
Well, revenues were in line, but there was a margin miss. So the company's Q4 margins at 18.7% declined versus 20.4% in Q3. So margins were a miss. Analysts say this was an account of higher marketing costs for the launch of a product, as well as some subsea cable cuts that were there in the early part of the year. So margins declined more than what the street was anticipating. And I think the management had indicated that they wanted to end the year with exit margins of 20%. Well, they've not managed to do that. Revenues were in line. So consolidated revenues went up by 3.3% quarter on quarter. Profit shows a big jump at 1,040 crore. But this is on account of two reasons. One, they sold their stake in their subsidiary, Tata Communications Payment Solution Limited. That aided the profits by about 311 crore. And plus, there was a Chennai land sale. If you strip that out, profits pre-exceptional are actually down.
All right, Rima, thank you very much for that. Let's just talk about the next one. We have M&M Finance, AU Small Finance Bank in focus. Abhishek is here with details on both these. Abhishek, morning.
Morning, Prashant. So, M&M Finance, the loan growth continues to slow down. Elevated provisions have dent earnings this time around. So, the NII is 6.5% ahead of our poll. However, the PAT is 6% below our poll. Our disbursal growth was weak, just 1.5% YOY and a decline of 5.7% quarter-on-quarter. AUM growth at 17.4% YOY is perhaps one of the lowest growth that you are seeing in last 10 quarters. The net interest margin has come in at 15-quarter low of 6.5%. Operating efficiency has deteriorated, so cost to income ratio is at 8-quarter high of 44.25%. Now ROA is at 4-quarter low of 1.7% versus 2.8% in the previous quarter. A pain point that has come in their housing finance subsidiary, it has reported the highest quarterly loss ever at 152 crores. So housing finance, the loan book in itself in absolute value is about 5-quarter low of 6,894 crore. AU Small Finance Bank, the other income has aided the top line growth. PNL, the NII is slightly ahead of our poll and PAT is in line with our poll. Other income was up 23% quarter-on-quarter. In that, the fee component was up 15% quarter-on-quarter. So it looks like treasury gains were very strong over here. Provisions have increased 26.5% on a sequential basis, despite the fact that slippages are down 6.5%. So it looks like they were keen on improving their PCR or provision coverage ratio. Net interest margin has declined by 10 basis points quarter-on-quarter. And sequentially, if you take a look, some of the segments have seen degrown in their loan portfolio, like gold loans, which are down 3.7%, microfinance loans are down 7%, credit card is down about 17.5%, and personal loan down about 10.8% quarter-on-quarter. So unsecured portfolio, they are looking to curtail their portfolio over there. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's go back to Rima. Bharti Airtel and Bharti Hexacom on your radar. Tell us more, Rima.
Indeed. So, Bharti Airtel and Hexacom have acquired the rights to use 400 megahertz of the 26 gigawatt of 5G spectrum from Adani. Now, just to go back, Adani had purchased this 5G spectrum in 2022, and the objective at that time was to use it for captive consumption. But they were unable to meet the rollout requirements over the last 3 years, and therefore Adani Enterprises has given up that 5G spectrum, which has been now lapped up by Bharti Airtel and Bharti Hexacom. So basically, it's positive for the Airtel group because it will help in expanding their 5G presence. Back to you.
Okay, all right, got it. So we'll watch out for both Bharti as well as Bharti Hexacom. Thank you for that, Rima. With that, let's get to Cyient DLM, also reported numbers. Upasana, how did they look?
Well, overall, company has reported a good set of numbers. Revenue, EBITDA and PAT in line with street estimates, while margins stood much above the estimates. Now, coming to the numbers first. Now, revenue saw an uptick of 18% on a YoY basis. EBITDA saw an uptick of as high as 51% on a YoY basis. And EBITDA margin stood at 13.4% with an increase of 290 basis points. This was mainly driven due to change in company's product mix, one-off impact of HCLTech acquisition, and operational efficiency aided margin expansion. Now, PAT saw an uptick of 37% at 31 crore, while order book of the company continues to see a downward trend, standing at 1906 crore with a downtick of 12% on a YoY basis and 11% sequentially. So, all in all, good set of numbers for Cyient DLM, going with green on this one.
All right, I think we've got the management of Upasana. Thanks very much for that. Cyient DLM joining us a little later, so that's the conversation you'll hear in a bit. Well, Vari Energy is the next one that we're going to focus on. Vivek is here with details. Vivek, morning.
Well, good morning. Remember, these companies are already in focus on account of significant tariffs that have been imposed as far as other Southeast Asian countries are concerned, making exports more viable and more attractive for the entire space. Vari Energy yesterday declared their Q4 results, and it's a very strong set of numbers from the company this time around. Revenues high by almost 36.5% above the 4,000 crore mark. EBITDA up by almost 120%, and EBITDA coming in at close to 923 crore on a year-on-year basis. Margins too much stronger, almost 1,000 basis points expansion as far as margins are concerned. Profitability higher by 34%, coming close to the 619 crore mark, a one-time impact to seen over there. Now, talking about the order book that the company currently enjoys is for 25 gigawatt, indicating that the order book size or visibility is close to 47,000 crore. This is compared slightly unfavorably against the 50,000 crore order book that the company was sitting on at the end of Q3. Now, the company has also gone ahead and given an EBITDA guidance for FY26. 5,500 crore to 6,600 crore is what the company has given, indicating that there could be almost a doubling of EBITDA as far as FY26 is concerned. When we are talking about the key guidance in terms of operationals, ingot wafer 6 gigawatt facility to be operational by FY27. Modules capacity is expecting to add close to 4.8 gigawatts. So some green as far as Bharti is concerned today.
Okay, all right, absolutely. Those numbers do look good. Thank you, Vivek, very much for that. Finally, let's get to RIA. Balrampur Chini declared their full year update, the sugar year update. RIA, how does it look?
Well, yes, Balrampur Chini has come out with its operational update for this year's sugar season. The total sugarcane crushed for this season has decreased by around 1.7% on a year-on-year basis, coming in at just 99.16 lakh metric tons. Even the net sugar produced has seen a decrease of around 12.5% on a year-on-year basis, coming in at 9.24 lakh metric tons versus 10.56 lakh metric tons in FY24. The sugarcane diverted towards ethanol has seen a sharp increase, coming in at 10.7% in this year versus just 3.7% in the last year. But if you look at the sugarcane diverted towards B-heavy molasses, that has seen a continuous decrease in the last 3 years, and this year it has come in at 51.4%. Even the sugarcane diverted towards C-heavy molasses has seen a decrease in this year, coming in at 37.9%. The sugar recovery metrics have also dipped this time around, coming in at 9.32% in this year versus 10.46% last year. So going with red for this counter.
Thanks, Ria, for that. Well, let's do a quick recap of all the top stocks we just discussed. The ones with positive news flow, we have HCLTech, Havells, AU Small Finance Bank, Bharti Airtel, Bharti Hexacom, Cyan DLM, and Bharti NGs. All of them on the positive side. On the flip side, you have Tata Communications, Mahindra & Mahindra Finance, and Balrampur Chini. That's about all the equity market action. Well, let's hop across to Manisha. She's here to tell us about what's going on in the commodity markets. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with gold prices because after making an all-time high of $3,500 an ounce yesterday, the gold prices closed at $33.80. So there was an intraday hike, but we didn't see the prices close above that. So the chart's really slightly wobbly at this point in time. In any case, we've gained about by 31% in this year. Couple of things, as you guys have been talking about. One, the U.S. Treasury SEC is expecting de-escalation in U.S.-China trade conflict has led to some profit-taking in gold. And then the U.S. president also backing away from threats to dismiss Fed's Powell has done that trick. The markets, though, are looking at support because the ETF holdings in gold in dollar terms, in rupee terms, and globally have continued to be on the higher side. And the sell-off in U.S. bonds has just about continued. That seems to be supporting markets as well. But the other thing that seems to be doing well and continuously doing well for a couple of weeks now has been the metals as a sector. And copper here continues to outperform. We're looking at 2-week highs in sense of copper. The decline in US dollar has been supportive, and the copper prices are up by nearly 5% on the week. Markets, of course, will be waiting for a lot of US data. But at this point in time, the precious metals and the base metal prices in the Asian markets have opened on a positive note.
All right, Manisha, thank you very much for that. So that's commodities in focus, and gold takes a bit of a backseat this morning. Cyan DLM management and their fourth quarter earnings on the other side. Stay tuned.